Hey there, entrepreneurs and business owners from around the country. My name's Chad Pavel, and welcome to our year-end update video where I'm going to walk through the 3 biggest topics on our small business clients' minds right now. There's a lot of uncertainty in the tax code. There's a lot of uncertainty due to the COVID pandemic, and there's a lot of uncertainty around how is the world going to change moving forward starting in 2021. There's a new administration. There's a whole new world of COVID post-opening, so stores will be opening back up. Schools could potentially be opening back up. What is this new world in 2021 going to look like, and how is it going to impact your business, your wealth, and even your ability to go outside and enjoy yourself with your family? So the 3 biggest things right now on our clients' minds are, number 1, year-end tax savings opportunities. Number 2, as a subset of the tax opportunities, what's going to happen in 2021? What are the areas, the tax rates, the deductions that can potentially go away? Let's call it number 2, which is PPP Forgiveness. If you're a small business owner, you took a PPP loan, you are probably now getting emails, maybe phone calls from your banker asking you to begin preparing your PPP forgiveness application. So certainly you're thinking about what does that mean for you? What is the process for completing an application? What does it really mean to get your loan forgiven, and when does it happen? And finally, what is the tax impact on your 2021 and potentially 2020 taxes? It's actually a big one, so don't miss that. And finally, number 3, are there any more funding or bailout opportunities coming from the federal, the state, or local governments? And we'll go through a couple of ideas and things we've seen on our end right there. So let's start with number 1, year-end tax savings opportunities. So the first topic we'll talk about are year-end tax savings opportunities. This applies to virtually all types of businesses, but we are going to focus on LLC owners, even sole proprietors, multiple or multi-LLC owners or partnership owners, and multi-member LLC, owners. We're also going to talk about S corporation owners and even C corporation shareholders and owners as well. But we're primarily going to focus on the most popular small business entities, which are the LLC, both single member and multi-member, including the partnership, which is basically taxed the same way. And then, of course, the S corporation or small business corporation, which is mainly just a tax election, if you didn't know that yet. So let's talk about the first thing. You've probably heard before that you need to time your purchases and time your receipt of cash at the end of the year to minimize your taxes. So what does that really mean? The first thing it means is if you're a cash basis taxpayer, that means you will basically have to record your income if you've received a check in the bank account and made the deposit, even if you've received a check and it's still in your visor in your truck, that's still technically receiving cash. So you will have to pay taxes on that. So the question really is, how can you defer or push out your receipt of income into next year? And even just as importantly, how do you bring purchases in and investments into this year so that you can minimize your revenue and maximize your write-offs to minimize your taxable income this year? Now, a disclaimer, before you go and spend a bunch of money to buy equipment and take on debt or spend all your cash to buy write-offs, before you tell all of your clients, hey, don't pay me, you still have a month or so as of the creation of this video till the end of the year, so don't hurt your working capital, don't hurt your business simply because you've heard that it's going to save you in taxes. That's the last thing you want to do, is put yourself into a bad position where you can't pay your bills, you can't pay yourself, you can't pay your employees. So don't go and do anything egregious simply to save taxes. Be aware of your working capital situation. So what does that really mean to defer receipt of payments? If you can handle it, if you don't need the cash, you can certainly wait to send your clients invoices for the end of November and December services that you have provided. You certainly could do that, although many sharp customers will want to actually pay you because they want their expenses up. So if you can hold back and maybe slow invoice a couple of your customers, that will certainly help you reduce the cash that you're going to receive by the year end. So that's one way to do it. Another way to reduce your taxable income, again, is to maximize the timing of your purchases. So let's say you have to go buy a bunch of materials, job materials. You've got office supplies, computer parts, computer services, legal services, accounting services. Let's say you go and total up all the things you know you're going to have to spend money on in 2021. And let's say that your income is higher than you thought it would be in 2020. What can you do? What are your options? Well, you can actually go and prepay for up to 1 year of services today. You can deduct it in 2020 if you pre-purchase or prepay for 12 months of services or software or anything that would be expensed if you were to buy it today. You can prepay for up to 12 months. So what we're helping some clients do is go and look at their accountants, their law firms, some of their software providers, and see if they could even get a discount for prepaying for 6 or 12 months ahead of time versus paying every single month after the service has been performed. So if you need some extra deductions, I would start calling up your top 5 or 10 service providers, software providers, and see if you can pre-purchase a few services for 3, 6, even 12 months if you have the cash, and see if you can get a discount to do it. That will help you have more write-offs this year. And then, of course, next year you won't have the write-offs, so you need to go and continue this practice at the end of each year. We're helping a lot of clients do that. It's working very well. So other year-end tax savings opportunities, depreciation. If you have equipment that you need to buy, you've probably heard of bonus depreciation or Section 179 depreciation opportunities. What that basically means is there's a list of hundreds, if not thousands, of purchases that you can make in your business that are capital assets or capital purchases. We're talking about computers, servers. We're talking about big purchases of prepackaged software, dump trucks, machines, big tools, trucks, vans. There are, again, a list of depreciation schedules, and a lot of these items mean you can purchase them. You can even finance them. You don't need to buy them for cash. If you purchase these items, they will be 100%, up to 100% deductible this year. Check with your accountant on how to do this properly, but definitely mention the concept of bonus depreciation and Section 179 depreciation for purchases of qualified equipment. And so again, what that means is if you own a construction company, my father-in-law is a construction company, and what we do every year is we look at the backlog of jobs that he has that are going to start in January or February. We look at all the work he has coming up, and then we start to look through catalogs. All right, do you need a new trailer? Do you need a new excavator? Do you need a new backhoe, a new tractor? What do you need that we can buy today? Even if we finance it and pay it off in 6 months, what can you buy today that will give you a write-off in 2020 that you can then use in next year, the year after? So that's a big one, is depreciation and bonus write-offs for equipment purchases. The last tax savings opportunity for partnerships and S corporations and other small businesses is really doing all of the reimbursements to the owners that a lot of people miss. If you use a personal vehicle, if you use your home for your business, if you have paid for insurance, if you put things on your personal credit card for the business, if you haven't implemented retirement plans, especially pre-tax retirement plans, there are a number of things that you can be doing right now to take that money out of business as a deduction and reimburse yourself tax-free. So what we do with a lot of clients is we go through all the money they've spent, especially if they've just started the business in the last couple of years, and we total up these things and help them understand which can be taken out tax-free, which should be reimbursed back to them as owners since they essentially lent assets or cash to the business, and then we help them take all of that cash out under an accountable plan or expense reimbursement plan. So I know you've probably heard of a lot of these things, but timing of purchases, prepaying for up to 12 months of services can help you get big write-offs, depreciation, bonus depreciation, buying equipment now, and taking the full write-off of the entire purchase price versus having to write it off and depreciate it over a number of years, and certainly reimbursements and accountable plan type of practices where you're reimbursing yourself for vehicle, home, insurance, other things that you've bought for the business that you haven't yet reimbursed yourself for. You'd be surprised at how much money is sitting in those potential reimbursements. All right, so the next thing we're going to talk about right now is PPP Forgiveness. So there's two things going on with the Paycheck Protection Program loan right now. There's forgiveness, and then there's the actual concept of having to pay tax on the money that's been written off or on the money that you've used. So if you're unfamiliar, we've included some links to some other articles that we've written specifically related to PPP. So here's the short of it. if you received a PPP loan this year related to the CARES Act, related to COVID-19, it's time to start applying for forgiveness. Now, you don't have to have it written off. You don't have to apply for forgiveness. You'll simply pay the loan back over a number of years at around 1% interest rate. That's totally your prerogative if you want to do that. You're doing a good service to the U.S. government if you're paying that loan back versus having them write it off. But most businesses are going to have that loan forgiven. So they're going through the PPP forgiveness process. Now, what we've seen is the Treasury has put out 3 forms, the 3508S, which is for borrowers who borrowed under $50,000, the 3508 standard form, and that is for borrowers who borrowed over $50,000, who had changes in their payroll, deductions in their payroll amounts, or in their number of employees. You have the 3508EZ, which is for businesses that borrowed over $50,000, and those did not have drops in the number of employees or the payroll amount that they paid employees. So the calculations range from very simple: if you borrowed under $50,000, to if you increased your number of employees in the covered period, you'll use the 3508EZ. And of course, if you had some other strange things going on, if you borrowed over $2 million, or you had to reduce headcount, you'll have the 3508 and some other maybe some other schedules. So basically, you need to start your PPP forgiveness applications now. So the question really is right now, not so much will this loan be written off, but the question is when, in which period, and number 2, what are the tax implications? So what a lot of business owners are very surprised to learn is that your expenses that you used PPP money to pay, primarily payroll, if your loan is forgiven, which it most certainly should be if you've done it properly, the portion that's forgiven and the portion that you use to actually pay for those expenses, payroll, rent, utilities, taxes, that money is not deductible on your P&L. So if you received $100,000 PPP and you spent $150,000 of it on payroll, the $100,000 that's going to be forgiven is not tax deductible, right? So it's hit your profit and loss statement as a deduction. What you basically need to do is adjust it. You need to add income on your other income category back to your profit and loss statement, and you're going to have to pay taxes on it. So it's kind of a double whammy where the good news is you received free money, right? You've received $50, $100, $200, even $1 million or more from the U.S. government. The sort of bad news is you actually have to pay tax on it. And unless the IRS and the Treasury come out with anything different in the next couple of months before people file their tax returns on March or April 15th, then you're going to have to pay tax on that income. So the big tax planning opportunity right now is, I received $100,000 in PPP. I've gotten it 100% written off. The question is, do I have an additional $100,000 in income? And if so, in which period do I need to record that income? So right now, again, this could change. You're going to have $100,000 in other income, taxable income in 2020. If you're reasonably certain that your loan will be forgiven, then that amount is going to be included in 2020's income. You're probably going to get a 1099 or some similar form from the bank, maybe from the Treasury, saying this is additional income. That's typically what happens when loans are discharged. You almost always pay taxes, treat as income the amount of loan that's been discharged. Because think of it, you received $100,000 from a bank. Typically, you have to pay it back. If you pay it back, especially with interest, there's no tax because you've borrowed and you paid it back. It's not income, it's not an expense. If you received $100,000 as a loan and you don't need to pay the loan back, you just got $100,000 in free money. The IRS and your state is going to tax you on that. So the big thing is, if you are seeking PPP forgiveness, you need to tie it in with a good year-end tax planning strategy, because you're probably going to have an additional $20,000, $50,000, $200,000, $500,000, $1 million in income if your PPP loan is forgiven. All right. So the number 3 thing we're going to talk about very quickly is, are there any more funding opportunities coming right now at the federal or state or local level? The question is very, very likely. As you probably have seen, there have been new bills being proposed by Congress, they're starting to talk about further stimulus. We're not quite sure if it's going to go to businesses or individuals. It's probably going to be some combination of the two. And if I haven't seen the latest guidance yet from Congress, post it in the comments and let me know. We'll certainly be doing research as the story unfolds. But basically, there should be more funding coming. We're not sure how it's going to look. If it will be more unemployment, maybe it'll be more stimulus checks simply coming right out to individuals. Maybe it's more PPP funding. Maybe it's another disaster loan. We're simply not sure. But basically what you need to do is just look at your local chamber of commerce, call local banks, call your state representative, go to your Secretary of State website in your particular home state where you operate your business and start looking around. What we've seen is there are lending opportunities from local banks, from local business or economic development organizations that are typically part of your city, county, or state. There are grant opportunities. There will very likely be some more federal funding coming down the line. We've even heard about the Main Street Lending Program. We haven't seen anybody successfully doing a loan, at least not in our client base, or pursuing the loan, because maybe a lot of banks are actually holding back information, not really pursuing Main Street lending programs. There certainly are plenty of banks out there that are. So that's something that you could pursue. So in essence, there are definitely some funding opportunities coming. The only question is it going to be enough? Is it going to come soon enough? And will the funding opportunities or the support opportunities be good enough, or will they even work for your industry or for your business model? So to be determined, but what I would recommend is start to reach out to your Chamber of Commerce and your state reps and your state websites and start calling, asking, emailing, looking for more funding opportunities if you do need it. Thanks for watching, everybody. Be sure to hit the subscribe button if you're on YouTube, like button on Facebook, and we'll continue to provide tax savings and business growth tips and tricks every single week. Look forward to helping you soon.